Hello, and welcome back to Explain the Charts, your go-to channel for detailed stock analysis. Today, on November 20th, 2025, we're taking a close look at Intel Corporation, ticker symbol Intel. There's a lot of conflicting information out there right now, from exciting partnership news to broader market fears, and the chart is telling a fascinating story of its own. We'll start by breaking down the latest headlines impacting Intel and the semiconductor sector. Then, we'll switch gears and perform a multi-timeframe technical analysis to identify key levels and potential future price action. First, let's talk about the news. Recent headlines have been a mixed bag for Intel investors. On the positive side, there's significant buzz around a strategic partnership with Nvidia, which has certainly boosted some investor confidence. The company's new leadership has also been communicating an optimistic vision for the future. However, this optimism is being tempered by some serious headwinds. Several news outlets have reported that chip stocks, including Intel, AMD, and Nvidia, have been falling recently due to growing fears of an AI bubble. This suggests that the incredible rally we saw might be overextended, a sentiment echoed by a recent Seeking Alpha article that downgraded Intel to a hold. Analysts remain skeptical, pointing to competitive pressure from rivals like AMD and ARM, leading to a consensus reduce rating from some firms. So, we have a classic battle between company-specific positive developments and sector-wide bearish sentiment. Key catalysts to watch moving forward will be concrete details on the Nvidia partnership, any new foundry customer announcements, and, of course, the next earnings report. Now, let's see how this news translates to the daily chart. Looking at the full picture, Intel has had an absolutely wild ride over the past year. The stock experienced a severe downturn, finding a major bottom around $17.66 back in April. After that low, it spent months consolidating and building a base. The real fireworks started in late September of this year. We can see a massive surge in price and volume, breaking out from the $25 level and launching a powerful uptrend. This incredible rally was likely fueled by the growing hype around AI and optimism about Intel's turnaround strategy. The momentum carried the stock all the way to a 52-week high of $42.48 in late October. This level now stands as the most significant psychological and technical resistance for the bulls to overcome. Let's zoom in on that breakout period from mid-September to the end of October. As we narrow our focus, you can see the sheer force of this upward move. Notice the massive green candles on September 18th, 25th, and October 1st, each accompanied by a huge spike in volume. This indicates strong institutional buying and conviction behind the rally. The price gapped up significantly, leaving the sub-$25 range far behind. However, since peaking at $42.48 on October 28th, the trend has clearly reversed in the short term. We've seen a sharp pullback of over 15%, which aligns perfectly with the news about AI bubble fears taking hold across the sector. To get a better sense of this recent downturn, let's switch to the 1-hour chart. Here we can see the price action since that late October peak. The chart shows a clear series of lower highs and lower lows, which is the definition of a short-term downtrend. The initial drop was aggressive, falling from over $42 to below $40 in just a couple of days. After a brief attempt to stabilize, another wave of selling hit in early November, pushing the price down to the $37 level. More recently, we saw a sharp decline from around $38 down to the low $34s in mid-November. This chart clearly illustrates the selling pressure that has dominated the stock for the past 3 weeks. The key question now is whether this is just a healthy correction after a massive run-up, or the start of a more significant downtrend. Now, let's drill down even further to the 15-minute chart to analyze the price action from the last few days. This time frame is crucial for understanding the current battle between buyers and sellers. We can see that the stock tried to find a bottom around the $34.20 mark on November 17th, but failed, dropping to a recent low near $33.57 on the 18th. However, yesterday, on November 19th, we saw a very strong intraday reversal. The price surged from the mid-$34s all the way above $35.50 on high volume. This bounce could be a direct reaction to the positive headlines about the Nvidia partnership, as traders bought the dip on good news. Since that spike, the price has been consolidating, which is typical after a sharp move. For day traders, the immediate resistance is the recent high around $35.75, and the immediate support is the consolidation low around $34.25. Okay, let's pull back to the daily chart to recap and discuss potential scenarios. To summarize, the long-term trend reversed from bearish to bullish in September, but the short-term trend is currently bearish after the recent peak. Here are the key price levels to watch. The most critical resistance is the 52-week high at $42.48. Minor resistance levels sit at the psychological $38.40 marks. On the downside, we are currently testing a key support zone between $33.50 and $34.50. If that fails to hold, the next major support level is the psychological $30 area, followed by the September breakout point around $25. The ultimate floor remains the yearly low of $17.66. Now for some unbiased predictions. A bullish scenario, which I see as having about a 60% probability, involves the current support at $34 holding firm. If we get more positive news catalysts, we could see a move to retest $38. This becomes much more likely if we see a close above $36 on strong volume. A bearish scenario, with a 40% probability, would be triggered by a decisive break and close below $33.50. This would open the door for a slide down to the $30 support level, especially if negative sentiment continues to dominate the chip sector. Keep a close eye on upcoming market data and any official announcements from Intel regarding its partnerships and production progress. These will likely be the primary drivers of the next major move. And finally, a quick disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. Always conduct your own thorough research before making any investment decisions.